Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is your trading plan is always right. You see, trading is a very, very challenging business. In fact, it's a business where most people fail. The majority of people fail, and it's not because they can't make money in the markets. There's the ability to do so, but they don't follow the rules, or they don't have rules. They don't have money management rules. They don't have trade management rules. They don't have a trading plan. They don't take stop losses. There's so many things you're not doing. And here's the rub. You can do the right thing 80 or 90% of the time, but that 10 or 20% of the time you do the wrong thing, it takes over the 80% of the time you did the right thing, right? It's kind of like this, guys. It's like when you take a trade and you take full advantage of the loser, you let it go way down against you, but when it starts going in your direction, you cut it off short. You don't allow it to hit your target, right? So these are some of the reasons that traders fail, and a lot of traders fail because of these things. So today, we're going to talk about why traders do those things, and also how you can correct and how you can fix those things, as well as just how costly and how expensive it is. I'm going to use some of my personal experiences in this video to show you how one or two small mistakes can end up costing you thousands and thousands of dollars. All right, so if you like these videos, please click the like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is your plan is always right. This is a hard one for people, okay? People, they say they believe in their plan, right? They say that their plan is there to help them. But if that's the case, then why do so many people break their plan? So we're going to discuss a little bit about that today. We're also going to discuss the 3 or 4 reasons that most people fail. We're going to discuss how expensive breaking your trading plan is, and generally why you shouldn't do it, especially on the fly, out of nowhere. You spend time planning your approach to the markets when things are calm and quiet, right? See, when you're in the middle of a trade, there's potential emotional duress, right? You have emotions, fear and greed bombarding you left and right. But when the market's closed and you're calm, you're making better decisions and better choices. So we need to discuss why it is when you're making those better decisions and choices, why that doesn't manifest into following those better decisions and choices in real time, okay? And obviously psychology is a part of that. However, before we get to that, we have to talk about when will the insanity stop? When will the insanity stop? Some of this stuff is sad. I mean, last week we had a wife who lost $350,000 and her husband didn't know about it, doesn't know about it. A year later, her husband didn't know about it. That was tough. Now this week we have, I am very down and depressed. I lost $500,000, okay? Need someone to talk to. You need more than someone to talk to, okay? Hey guys, last week I lost $500,000 on hundreds of 40 strike calls for CCIV. This is a little bit older. It tanked after hours, and ever since the loss, I am not the same. I want to hear some stories and feel like I can come back. I only have $20,000 left. Please comment if you're okay with me talking to you. Guys, think about that for a second. $20,000 left. You guys, every day that you come into the chat room, and every time I do a lecture, I talk about the single most important thing in trading is money management. Manage your money. To succeed, you first have to last. Well, how do you last when you have $520,000 and then you waste $500,000 of it? How does that work? It doesn't, is the answer. And then these people go on Wall Street Bets, they go on Reddit subforums, they go to all these places looking for advice after the fact. And this is the reason this industry has such a horrible reputation, is because most people have no money management, or they see some guru out there taking $2 into $2 million, and they don't realize that that person was probably just very lucky to do that. So the vast majority of traders fail. And it's not that the vast majority blow up all of their money, but they don't have money management. How are you going to succeed in something if you don't have any money left to do the thing you're trying to do? Right? It doesn't make any sense to me. But people do this all the time. I mean, just do a quick internet search and you can find hundreds, thousands of people that do this. And some do it on more egregious levels than others. And this, if you had $5 million, it's not a big deal. It's 10% of your account. But at $520,000, that represents what? Somewhere in the neighborhood of 97% of your account? Something like that. I don't know exact math on the top of my head, but somewhere on 97% of your account? What? You don't have any money management. And the answer to this person's question is, I want to hear some stories and feel like I can come back. You're not going to. And if you do, it's going to take you 5 or 10 years, because you got to start back at zero. You got to start at $5, $10 risk and basically act as if that 500 grand is never coming back. You'll have 20 grand now. So it's sad. I'm not kidding with you. It's sad to read these and listen to these things. I know we have a laugh. We have a joke at it, but it's not funny in any way, shape, or form. So I know most of the people here at Live Traders know better, and you wouldn't do something like this. But remember, the dollar amount doesn't matter so much. Meaning, if you had a $10,000 account and you lost 9,800 of it, that would be really bad. It's 98% of your account. It's the same thing as this person, right? So don't allow yourself to be in this position. Seek help, man, before you get to this spot. In fact, before you start, get some help. Because if you don't have money management, you're just not going to be around. You know, it's crazy, you know, what people do. So please, guys, manage your money. Manage it properly. And this is going to be appropriate for today's topic, okay? So, what is a trading plan? You're like, I'm logging off. I know what a trading plan is. Well, if you do, then why don't you have one? Why don't you follow it? And why aren't you more successful? Oh, smack, mic drop. I have a trading plan. Well, then why don't you follow it? And why aren't you doing better then? What's the problem? Well, you know, I'm kind of new. Bullshit. Don't lie to me, right? So a trading plan is simple. It's a written set of rules that guide your trading approach. That's it. I know, it's a great movie, isn't it, Roadhouse? Pain Don't Hurt. Anyway, at the hospital. She was cute in that movie. Nonetheless, that's besides the point. A written set of rules that guide your trading plan. Rules that include patterns you will trade, specific criteria for the above patterns, like a checklist, a pre-trade checklist, okay? The time frame in which you'll trade those patterns, a trade management approach, all or nothing, pivots, bar by bar, a hybrid approach, EMA approach, something like that, right? Money management, how much are you going to risk? Rules for raising and lowering your risk. I bet you most people listening, yes, I am sure some of you do. I bet you most of you in here don't have rules for lowering your risk. Some of you have rules for both. A few more of you have rules for raising, and even fewer yet have rules for lowering your risk. Okay? What's your maximum drawdown look like? What do you do if you hit the maximum drawdown? Do you go seek help? Do you lower your risk? Do you take a break? What do you do if you get to that point? I don't know. Okay, that's not good enough, right? Number of trades you can take per day, psychology, accountability, consequence rules, backtesting guidelines, daily routine, continuing education. Like, what is in this document that's called trading plan? And what's in it, is it realistic and reasonable for you to think you're going to be able to follow it? For example, Unmol made a comment today. He said, you know, I know the 84% rule sounds good, but he goes, I know I'm never going to do it. So it's not in my plan. That's actually a good answer. If you know for sure you don't have any chance, a snowball's chance in hell of actually doing it, then don't put that in your plan. It's like this. I haven't used this analogy in a long time, but I'll use it today. For those of you that are my age or older, I'm old now, I guess. Anyway, remember Mike Tyson's Punch-Out? Why do you start with Glass Joe? Why don't you start with Mike Tyson? Why don't they, when the game begins, why don't they just put you in the ring with Mike? Because that's not fair to you, because you're not ready for Mike. You start with Glass Joe, and then you work your way up. And 10 fighters later, after you go through Soto Popinski and a bunch of other guys, okay, you earn the right to fight Mike Tyson. Okay, and the first time you fight him, he usually knocks you out. Well, the point is you earn the right to do certain things in trading. You don't just go from, say, 0 to 5R all or nothing. You're probably not that person. There's a chance you could be, right? So when you look at this and you're building a plan, you not only have to have rules, you have to have rules that are conducive to your perceived personality. And you're like, well, what do you mean, Jared, perceived? Who you really are and who you are as a trader, or who you think you are as a trader, they're two different things, right? Who you are out there in the general real world public population is not the same person you are as a trader. You are not as patient as a trader as you are dealing with, I don't know, your kids, or dealing with waiting at line in Disneyland or something like that. Okay? And you'll find that out the first month or two you start trading. Okay? Then you make some adjustments to your plan. All right? So that's what's important about a trading plan. It's a guideline, a set of rules, an approach, a systematic way for you to approach the markets every day. And guess what? You should be thankful, because it answers all your questions. There should almost never be a time you're not sure what to do, because your plan should have an answer for that, right? It's like, I don't know, it's like asking for directions and then not listening to the directions, or just being a typical guy and just not asking for directions in general, right? So you think about traders. It's like, hey, I'm not even going to ask for directions. That's half of traders. The other half says, I need directions. And then maybe half of that half, which is 75% overall, says, well, I asked for directions, but I don't need them. I'm not going to follow them. Why do we do this? So without a trading plan, you're blind with no rules, which means you're a gambler. So you want to know why people think trading's like gambling? Because it is. Because most people trade like gamblers. So I get it. It makes sense. I'm not even mad at people for calling trading gambling, because either they are a gambler or they just don't understand what proper trading looks like. So what I've decided to do today is go over some trades I've taken. Some of you are like, I knew this was coming. I do this probably once a year. I think I did this about 9 months ago, where if I do something that I feel is against my plan, I like to publicly chastise myself for it in hopes that you guys will learn from it. All right, and this is what happened last week and just last week, really, okay? I, with all my infinite wisdom, because I know better than my plan, with all my infinite wisdom, I decided that, you know what, 2R going to break even at 1R, although doing okay, wasn't doing well enough. So I decided I wanted to start taking 1/3 to half of my shares off at break even, right? That's what I decided. And I just whimsically, randomly decided this last week, last Monday to be specific. And I thought, well, it seems like a lot of stocks are going 1 to 1.5R and then they're pulling back. So might as well take a little money from these stocks. Might as well take, half of an R from it or 1/3 of an R. Make a little bit of money. Make a few $100, $500, right? That was the thought process. But 1, I didn't back test it. And 2, I did it randomly in the middle of a month. Let me repeat it so you guys can learn from my mistake. I did it randomly in the middle of a month, and I didn't really backtest it. It was just a perceived perception. And my perception may have even been right. Who knows? Okay? So let's take a look at a few trades. All right? Some of you have seen these in the chat room, obviously. But this was basically a daily novice gap, right? We always start with the daily, and you see red, 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 red. The day before was this wide range red bar on huge monster volume, and then you get this, what I would consider a mega gap down. I mean, it was down over 30% at one point, and it was down tons of days in a row. So I don't have a problem with this trade. It's a 1-minute breakout after a novice gap on BHE. So really no issue. The entry at 9, the stop at 8, no issue. Right? It went 2 to 1. No issue, right? So there's no issue with the daily. There's no issue with the 1-minute entry. That's not the problem. I followed my rules there. The problem was I didn't get 2R out of this thing, right? I ultimately ended getting, I want to say like $2,000. I should have gone back and pulled out the P&L. I can see right here I got at least $1,800 out of it at a minimum. But I want to say I got somewhere around $2,000 out of this. Again, I don't know exactly, but somewhere around there. I should have gotten $3,000 out of it. Right? That's what 2R would have been and should have been. I did not. So I cost myself half R to 2/3 of an R, something like that. Okay, somewhere in that neighborhood on this 1 minute breakout. Okay, why? Because I sold some at 1R. See, that changes everything, right? I sold some at 1R. I messed these arrows up, but you get the point. I think the entry was 850 by 8, whatever. But anyway, you get the point, okay? So what I'm saying is the stock did everything I wanted to do, and the market has an uncanny way of teaching us hard lessons. True? Second you change or to a new management, the market slaps you. The second you raise your risk level, the market slaps you. So the first day that I try this new management where I sell 1/3 or half at 1R, what happens? The market gives me a 2R trade, a painless 2R trade, right? Then the next day, what happens? I get 2 trades, one on IBM, one on BHC again, a decent buy setup, not the world's greatest buy setup. There's a little bit of overlap, but a lot of bottoming tails here, right? 130.85 was the entry on this, okay? The stop was 130-ish, and this stock went, wait for it, 2R, right? We needed $1.70 for this to go 2R, and this thing ended up going $2.15. So it went 2.5R, give or take, on IBM. Guess what I did? I sold half at 1R and half at 2R. I ended up making about 1.5R on this, okay? BHC on the 2 minute gave a really nice little wedge right here, right? Little flag wedge, little higher lows, not quite lower highs, but higher lows. And we got in, got a little dicey. We had a little pop, drop, pop, but 975 was the entry, 950 was the stop loss. Oh my goodness, right? Oh my goodness. This thing ended up going way higher than this, much, much, much higher than this. But the point is, we needed $10.25 for full 2R. What did I do? Sell half at 1R, sell half at 2R, get an R1/2 out of it. So on this particular day, I ended up making just a shade under 3R, and I should have made 4R, right? I made a shade under 3R, which was about 2.8, 2.9, and I should have made 3. So now we're only on Tuesday. We're only on Tuesday, and now I'm almost 2R behind the plan, like 1.7 behind the plan. It's only Tuesday, okay? Now, I skipped ahead a little bit because I didn't take pictures of all the trades I took. On whatchamacallit, Wednesday the 12th, I took more. In fact, Wednesday might have been the best day of the week, and for whatever reason, I didn't take a picture of those trades. Don't worry, you'll see the results in a second. So here's a 1 minute breakout on General Motors with relative strength. Okay, see them SPY pulling back. See General Motors at the high of the day. This turned out to be pretty good trade, right? Guess what it did? It went like, I think 6R, 7R or something insane. GM went that day. Okay, but we got in at 36.75. Stop loss was 36.50, another 25-cent stop loss, and this thing just ripped. We needed 37.25, and you could see it right here. By 10:30, it was like 38, 38.20, something like that. I mean, it was literally, I don't know, 4, 5, 6R higher just by 10:30. Okay, so when you look at this, you go, wow, okay, you pull out $2,400. I did a little better. I did a little. Instead of taking half at 1R, I only took a third, and I ended up getting, I don't know, 1.6, 1.7, something like that. But I should have made 3. So I cost myself $500. Should have made 3R. That's inexcusable, right? And you can see where I closed out some of my money right there. See, it says close P&L 550, open P&L 1600. I took off, I think I had, what was this, 25-cent stop loss? I think I had 6,000 shares. Yep, so I took a third off early, and I left the back 2/3 for a fuller target. Okay, point, the last 3 trades I just showed you all went 2R. And I'm not even showing you Wednesday's trades. And Wednesday was the best day of the week. Wednesday was the best day of the week, I think it was. My point, almost every trade that week, last week, that went 1R went 2R. Murphy's laughing at me. He's laughing at me. Because he's like, wait a second. You thought that because a lot of trades you perceived were only going 1 to 1.5R, so you're gonna outsmart me? Is that what you're trying to tell me? That's what the market's speaking to me, saying you're gonna outsmart me, the market. You're better than me, the market. So you're going to try to take half off at 1R and half off at 2. Oh, good luck, because I'm going to make every trade you take next week go 2R. And I'm going to do it painlessly, just to piss you off. Okay? That's what happens when you change your plan randomly on the fly without backtesting. That's what happens when you change your plan randomly on the fly without backtesting. Actual, lost money Monday, made money Tuesday, Wednesday, Thursday, Friday. It wasn't a terrible week. I ended up making 5R. Plan made 8 though. The plan made 8. And the reason these are rounded numbers is because that's what I would have made. It may have been like $3,010, right? I'd have to go back and look. But look at the difference. The plan had a great week. Started off -1 on Monday, and then +1. Then this day was +4, right? And then +2, +2. It's a good way to end the week. Now, why does this matter? It doesn't just matter because you broke your plan and I gave up 3R. I think it was like 2.8 or 2.9. I rounded this a little. But anyway, you get the point, right? That's money that you will never get back. It's gone now, forever. Forever and ever and ever, it's gone. So that's 25 plus 2. It's $4,500 that I would like to have back. But why is this important? Why is that important? You're going to find out in a second why it's important. But before I get to that, this was a comment from somebody in the chat room last week. Ever have a week like this? Down 1R this week because I sell too soon. If I didn't do that, then I would have been up +11. What? How many of you, rhetorical question, answer it under your breath. How many of you out there when you were a newer trader, my hand is up, how many of you were out there when you were a newer trader and you looked back at the end of the week, Saturday came around, Friday night came around, and you were looking at what would have happened if I had followed my plan, if I didn't sell too soon, if I had taken my stop losses, if. But on paper, had you just followed what's on paper, not even change the trades you took, take the same trades, but just manage them properly. Have looked back and go, I would have made 5R more, 2R more, 8R more. Almost everybody. Almost everybody. So then what happens is you go to your family and friends and you say, gosh, I'm taking the right stuff, but I just can't get through this management thing. I made $200 last week, but if I had just managed better per my plan, I would have made $2,000. And they look at you cross-eyed, deer in the headlights, and go, well, why don't you just follow your plan? And you sit there, well, geez, thanks, Nostradamus. Thanks, genius. You must be Albert Einstein's nephew. Duh, I wish I would have thought of that, right? They don't understand. They're not wrong, but they don't understand the emotional side. So then you do have to go back and ask yourself, why didn't I? Why didn't I? It's a serious question. See, the thing you don't want to do, and I did this probably for 6, 8, 10, 12 months, a long time. I'll be better on Monday. I went for a hike Saturday, meditated Sunday, watched a little football. I'm ready for Monday morning. All that stuff last week, that's in the past. What happens? Monday morning, you do the same damn thing. And then the week goes the same, and you have the same conversation with your friend, family, spouse on Friday or Saturday again, and they look at you really this time cross-eyed, straight up. Why don't you just follow your plan? Didn't I tell you that last week? Stupid is, stupid does, sir. Right? That's it. They do. And you sit there and you go, I know. So what do? You go for another hike? You meditate again on Sunday? You watch some more football? You eat healthier? You do a whole bunch of stuff. Monday comes around. This is like Groundhog's Day. And this is what happens over and over and over again. And it happens over and over and over again for 2 reasons. You have not accepted who you are objectively, objectively accepted that whatever plan you have on paper is not conducive to who you are. You haven't accepted this yet. You're still in the denial phase, right? Doubt is a real thing. We talked about professional wealth building strategies, right? Denial, anger, bargaining, depression, blah, 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 right? So, two things need to happen. One, there needs to be an adjustment to your plan. You need to make some adjustments. Two, someone needs to hold you accountable. So those are the two problems. There is no accountability. There is no consequence, kind of the same thing. And you're not actually fully understanding who it is that's trading. You're just telling yourself, well, I'll just be better next week. Well, why am I going to be better next week? It's been 5 weeks, 10 weeks, 20 weeks in a row and you're not better? Why is next week the week? I don't know, because it is. I get that thought process the first few weeks. I do. I get it. Because you don't know yet. You're just like, you know what? I made some mistakes. I'll be better. But if you've been doing this month after month, then that's just lying to yourself. You're just making excuses at that point. Again, I'll repeat. I get it if it happens a few weeks. You're new and you're like, hey, I'm new. I'll be better. But if you've been doing this for 3, 6, 9 months, you're not going to be better. You've proven to yourself that leopards don't change their spots. You've proven to yourself that if I keep doing what I've always done, I'll keep getting what I've always gotten, and I keep getting what I've always gotten. Stop. So, now, we saw this. Okay, we saw this. Cost myself some money. Now, this is where this comes back into play. So, Monday comes around, and I say, no more of the BS. I'm going back to what I should have been doing the week before. Not leaving my wingman. Oxy comes around. There's the entry. There's a stop. There's a target. Pat on the back, Jared. Good job. There's your $3,000 that I should have had all of last week. But guess what I don't have? I don't have the $4,500 that I gave up last week. So while I got the $3,000 on Oxy, I'm still short the $4,500 I gave up. You're going, well, so what, Jared? You're better. Okay, it's one angle. But this is where it impacts you. This. When you come in the next day, take a good trade and lose. End up losing 2 trades on this day. Why does it matter? It matters because now I lost $1,691. There was some slippage here, right, on this trade. And that was a good trade, and I would take it again, and that's not the problem. PDD is not the problem. Last week is the problem. So now, this eats into yesterday's profits. But had I had the $4,500 back, this wouldn't be as big of a deal. You lose an R, but you had 3 more R. I know this happens to you guys. 100% it happens to you guys. Where you look back and Monday, Tuesday, Wednesday, Thursday, you don't follow your plan, you make some money. Right? You actually make money. Let's just say you make 3R. But your plan says you should have made 6R. Friday comes along, you finally follow your plan to the letter of the law, and you lose 3R. And you're break even for the week with no money. But had you followed your plan every day of the week, you'd be up 3R. It's Monday through Thursday that was the problem. It's not that you lost on Friday. Losing is part of trading. Losing is part of winning. But when you win, you sell too soon, and when you lose, you take full advantage of the losses. This is not acceptable, and it is a path to destruction and frustration. You must take full advantage of the winners when you win, because you know you're going to take full advantage of the losers when you lose. It's just kind of the way Murphy is. So that's a week where you should have made 3, but you were break even. And it goes back to this comment. I want you to burn this into your head. I lost an R, I should have made plus 11. You know why? Because you're going to have some crappy weeks. It's going to happen. But if you take advantage of the good weeks, the crappy weeks have much less of an impact on your P&L. If you don't take advantage of the good weeks, the crappy weeks oversee your P&L, right? They take over your P&L. It's like when you go back at the end of the month and you're like, wow, I had 15 up days to 5 down days, but I'm break even for the month, or I only made a little bit of money. You're like, wait a second. How were you up 3/4 of the time, 75% of the time, and only down 25, but the 25% of the time completely offset the other 75%? How? Because you don't take advantage of the good days, and you take full advantage of the bad days. You see, you do stuff like this. This is a chart you saw last week. I put it in here, I just left it on purpose. You take a good trade, you have the right entry, you have the right stop loss, and then you get out right here at 220 and it goes to 440. And you just sit there and you're like, what is wrong with me? And then as you get out early, what are you thinking? Admit it. Admit it. Say it out loud. Scream it. God, I hope this thing comes back below break even. Right? So you get out too soon, and then you see this pullback right here, and you're like, gosh, just a little more. Go a little lower. Come on. Just a little lower. Come on. Just a little more. Break 180. Come on. You can do it. Why? Because you know you got out too soon, and you're trying to justify your mess up. It happens. Right? That's human nature. That's psychology. That is the mark of an average trader or a poor trader. You should never wish the stock comes back there. You should wish that it goes higher so that you'll feel the burn, feel the pain of making that stupid mistake. And it also justifies that your pattern was right and correct. Do you really want a great idea to actually pop and just pull back and stop you out? Not really. The only time you think that foolishly is when you get out of the trade early so you can justify stupidity. What are you doing? If you really want a future in this business, you need to feel the burn and feel the pain. And these trades need to work for you, or else you won't be around. So, the 4 biggest reasons that traders fail. They risk too much money too soon. We saw that in When Will the Insanity Stop? It's not funny or fun, but let's just take a look at it one more time real briefly. Oh, guys, that's pretty serious. I'm very down and depressed. I lost $500,000. Risking too much too soon, it's no joke. It's the real deal. Selling too soon, right? Sell too soon on their winners and take full advantage of their losers. This is poor trade management. This is poor money management. This is poor trade management. Don't use stop losses. Well, that's a product of poor money management. But this is another reason where you can be right 90% of the time and have 1 or 2 bad losses just destroy your entire account. And then, of course, having no trading plan, which is really just a product of these other 3 things, right? These other 3 things are a product of not having a plan, or you don't follow one. I mean, it's crazy. You cannot do these things and expect to be a successful trader. It just doesn't work like that. You can't do these things and expect to be successful. You want to be a statistics? Do these things. Risk too much too soon. Sell your winners too soon. Take full advantage of your losers. Don't use stop losses. Have no plan. Be a statistic. But don't complain about it when you are one. It's your fault. You did this to yourself. Why? You've been warned. I'm telling you right now. So if you've never heard it before and you're listening, you've now heard it before and there's no excuse. Right? Consequences are the only way you break out of this mold. It's the only way. Consequences are the only way you'll stick to your plan. We all need them. Society only operates smoothly because there are consequences for improper action. Tell me I'm wrong. What happened during Hurricane Katrina when there was no police around, when there were no police around? Robbing and looting was everywhere. Well, in California that still happens, but that's a different topic. Seriously, we need these people. They put their lives on the line to keep us in line. I'll say it one more time. Law enforcement puts their lives on the line to keep society in line. It would be anarchy and chaos without them. We like to think we are good people. but we still break the rules. Tell me you've never gone over the speed limit. Tell me you've never rolled through a stop sign, right? Tell me you've never lied to your boss. I'm sick today, but really I just wanted to go to the afternoon game of I don't know, the Yankees. Tell me you've never lied to your spouse. Tell me you've never cheated on your taxes. Bullshit. Every person out there, 99.9, has done at least one of those things that we've done, that I just mentioned. Lying to your boss, doing something illegal, even if it's not a big deal, speeding or something like that, lying to your spouse, cheating on your taxes. But what's to stop you from doing it over and over and over again? Consequences. That's it. So then you ask yourself, who holds your trading account accountable? Right? Who's holding your trading accountable? Who's doing that for you? It can't be you. Because we lie to ourselves. We lie to others. We lie to ourselves. You're not Mother Teresa. You're not Gandhi. You may think you are. You're just not. So unless you find someone that will help hold you accountable, and there is some form of consequence, hopefully significant, you will not follow the rules. There may be a few. Seriously, there may be a percent or two. But most will not. If you need it in society, you need it in your trading. And I can tell you, I'm the first person who needs that stuff. To say I've never gone over the speed limit, pff. To say I've never lied to a boss in the past, pff. I'm not going to go on the government one. To say I've never lied to my parents or your spouse, well, that would be lying to yourself. Oh, wait, that's what traders do every day. Lie to themselves. So until you stop lying to yourself, and the only way to make that happen is to have someone review the lies. Take a look at your trading plan, review your trades. You record yourself, show them the recording, show them you making mistakes. The only way you will fix it is when the pain becomes great enough. You've heard me say it. You will not change until the pain to stay the same becomes greater than the pain to change. Staying the same has to hurt more than change. If it doesn't, you won't change, because the one thing humans hate is change. In every aspect of life, no one likes change. We all resist it. We avoid it. No one likes change. So, if that's the case, what's going to make you change? What's going to make you follow your trading plan? I don't know. Only you do. Having someone, I don't know, lash you 3 times. Having someone take away your golf game. Have someone force you to, I don't know, donate to a charity that you loathe and hate. You find a consequence system that's meaningful. That's the key. Meaningful. It can't just be something random. Like, I'm not going to go out to eat this week. Great. So what? You'll have mac and cheese this week. Who cares? That's not a big deal. Okay? I feel like based on comments, 90% of people are bridge shopping. Yeah, probably, right? So, you must have consequence. And the easiest way to have those is have an outside third-party person inflict the consequence on you, because you're not going to inflict it on yourself. Because if you're able to inflict it on yourself, it means the pain wasn't great enough. It's like seppuku. How many people could actually do that? Think about that. You know, the honorable way of committing suicide, by cutting your bowels out. How many people could genuinely, honestly do that? In today's modern society, not that many. So if you weren't able to do that, then the consequence you have isn't serious enough in trading, meaning you'll say it's serious, but if you're able to inflict it upon yourself, then it's probably not that serious. Someone else has to inflict it upon you. Okay? So, I hope you guys learned through my mistakes and my foolishness and stupidity that breaking your trading plan is not only very expensive, it's detrimental to your future of trading. And you don't want to do it. Don't do it. Okay? It's very expensive. And for many of you, it will cost you your trading career. It really will. It's the difference between success and failure. So now you know what the what is, having a plan you can follow or at least try to follow, okay? You know what the cost of it is in terms of not doing it. And then on top of that, we've talked about how you can fix it. I can't hold your hand there. You're going to actually have to do some of this work yourself. You're going to have to walk alone once in a while. But you have the tools now. So stop making the excuses. All right, I'm Jared Wesley of Live Traders. I hope you guys learned a little bit about being better traders and following your trading plan. We will get back at it again next week.